again for joining Prepaid Grows Up, 4 major trends in quality and innovation. And for those of you who are just joining us, my name is Thea Garon. I'm a manager at CFSI, and I'll be your moderator for today's webinar. And I'd like to begin the webinar with a brief overview of CFSI. CFSI, or the Center for Financial Services Innovation, is one of the nation's leading authorities on consumer financial health. We lead a network of innovators committed to building high-quality consumer products and practices. And we work to achieve our mission in 4 key ways. We serve as a hub for innovators by fostering dialogue and collaboration through events and networking opportunities. We conduct consumer and market research to contribute to the dialogue around high-quality financial services and consumers' financial health. We provide grant funding to nonprofits, seed funding to startups looking to bring new and innovative ideas to market. And finally, we offer consulting services to financial institutions looking to improve their financial products and practices. So we'll begin this webinar with a brief background on the Compass principles, and then I'll turn the webinar over to my colleagues James Latta, who will present to you findings from the recent report that CFSI just released, the 2016 Prepaid Industry Scorecard, and he'll also highlight key industry trends from that scorecard. After that, I'll come back on to moderate a discussion with our guest speakers and to take questions from the audience. And I'm so thrilled that we'll be joined by a number of leading industry experts, including Crystal Anderson from H&R Block, Allison Holt from Regions Bank, and Paul Landry from the Bancorp Bank. They'll be joining us during the second half of the webinar, so please stay tuned for that. Before I turn the presentation over to James, I'd like to provide you with a brief background on the research that CFSI just released, the 2016 Prepaid Industry Scorecard, and the Compass principles, which provide the background for that research. So as many of you know, CFSI released its first Prepaid Industry Scorecard in 2014, and this scorecard was designed to assess the quality of the prepaid card industry. And the scorecard, 2014 scorecard, and this new 2016 scorecard, which we just released this past Tuesday, assesses the quality of the prepaid card industry by drawing on CFSI's Compass principles, which again, as many of you know, are aspirational guidelines for the design and delivery of high-quality financial services. The 4 Compass principles are embrace inclusion, build trust, promote success, and create opportunity. And as you can see, these 4 Compass principles are fairly high level and aspirational. So in order to operationalize them for the industry, CFSI has developed a series of Compass guides. The one that you're looking at on my screen now is the Compass Guide to Prepaid, which lays out concrete recommendations for the high quality design and delivery of prepaid cards. And again, the 2016 and the 2014 Prepaid Industry Scorecard before that draw upon this definition of quality that's articulated in the Compass Guide to Prepaid to assess the current level of quality in the prepaid card industry. So before turning the presentation over to James, I'd like to just take a moment to thank our funders who funded this work as well as some of our past work. The MetLife Foundation is a major sponsor of CFSI's ongoing consumer financial health work. And this report, the scorecard, and the Compass principles before that are supported by a grant from CFSI's founding partner, the Ford Foundation. Finally, the Compass principles are also supported by the Omidyar Network, and we are very grateful to these 3 funders for their ongoing support and contributions to our work. So with that, I'd like to turn it over to my colleague, James Latta, who will run you through the highlights of the 2016 Prepaid Industry Scorecard. Take it away, James.
All right, thank you, Thea. All right, so as Thea mentioned, the 2016 Prepaid Industry Scorecard seeks to assess the quality of the prepaid card industry. And just to be clear, throughout this presentation, when we say prepaid, we're just referring to general purpose reloadable prepaid cards. So to conduct this assessment, we surveyed 22 programs, including the largest providers in the industry, as well as some smaller providers who are putting forward some more innovative products. Based on our proprietary research as well as third-party industry research, we estimate that this sample covers 95% of the prepaid card market. To conduct our survey, we examined some publicly available materials, including each card's promotional content and legal agreements and things of that nature. And we supplemented that with interviews of the program managers to get some additional insights that aren't necessarily public knowledge. Cards were graded on the recommendations in CFSI's Compass Guide to Prepaid, which, as Thea mentioned, was released in 2012 and provides a blueprint for the design of high-quality prepaid cards based on the four Compass principles. It's important to note that the report scores the industry in the aggregate, so no grades were assigned to individual cards. This is because different cards pursued different strategies to provide value. Some cards may provide basic functionality at a low cost, others might have advanced features but charge a little more. And since no one card can do everything, having that variety of choice is an important part of the value that consumers get from the prepaid card industry. Now, for the grades. Thea, can we advance the slide? Thank you. Overall, we awarded the prepaid industry an A- for core practices, and those are the basic standards for a high-quality product. The industry received grades of B and a B- for stretch and next-gen practices, which are practices for providers looking to go beyond the basics and provide additional features. While the core and stretch grades did not change from our 2014 assessment, the next-gen grade did improve a full-letter grade from a C- 2 years ago to a B- today. Moving forward, let's go a little more in depth, and in order to do that, we have to take a moment to explain the structure of the scorecard. So, in order to conduct our assessment, we began by gathering data for each card on almost 100 example features and practices. Those are things like you can load the card with cash, or you can pay bills from the card, those kinds of features. These examples were then grouped into 23 best practices for prepaid cards. These include loading, paying, withdrawing, best practices. These practices are further grouped together into product dimensions, and the 6 product dimensions are just broader categories such as overall product functionality or overall customer service. The 23 best practices are also grouped together into core, stretch, and next generation practices, which are color-coded here in green, orange, and purple. And these groupings are used for the highest level of grading. Now moving on, we can take a look at the grades that have changed since our 2014 assessment. Among core practices, we observed modest improvement in loading the card, account terms and privacy, individual fees, and policies which build a supportive relationship between the consumer and provider. 2 stretch practices also improved. One was the ability to set up account alerts, and the second was additional benefits, which is a practice that includes functionality like companion cards, rewards programs, and surcharge-free ATMs. I should note here that a full list of the example features that go into each practice is available in the appendix of the scorecard for those who are interested. We also saw improvement in a number of next-gen practices. Access to budgeting tools and savings features both increased since 2014. We also saw an increase in providers offering prepaid users access to other financial services based on their card usage. These improvements drove the increase in the grades for additional services as well as the overall next-gen grade. Now we'd like to turn your attention to the trends which we believe have driven the improvement in quality that we have observed in the prepaid industry over the past 2 years. The trends we've observed are easier loading and unloading of the cards, more transparent and supportive fees, increased personalization, and enhanced functionality. We'll go into each of these trends in more detail, but we want to emphasize that these trends do not cover every improvement that we observed in the industry. After this webinar, if you have any questions about the changes that we don't cover, or about any particular practices or product dimensions, please reach out to us and we'd be happy to discuss individual practices in more detail. So, moving into the first trend. The first trend, as I said, is easier loading and unloading. Cardholders now have multiple affordable ways to load and withdraw funds from their cards. These options enhance the card's usability and help cardholders build financial health by allowing them to avoid costly fees for cashing checks or transferring money. The first example of this trend is the increased availability of remote deposit capture. Today, 66% of the prepaid market offers their customers remote deposit capability, up from 35% 2 years ago. And please note, these numbers reflect the weighted market share of providers that have adopted this feature. In other words, 66% of prepaid card consumers get their cards from providers that offer remote deposit capture. To see the number of cards that offer this, please see the report where we match market share numbers to the number of cards from our sample for all of our practices. All right, remote deposit capture is especially valuable for individuals who do not have checking accounts, as it allows them to conduct their transactions by check without having to resort to check cashing services, and it allows them to avoid those check cashing fees. Adoption of this feature over the past 2 years has really been driven by Ingo Money, which is a company which provides RDC services either through the card provider's mobile app or through the Ingo app. A majority of the cards which offer RDC do use Ingo for this service, including Account Now, which was one of the first cards to partner with Ingo when that app was launched in 2013. We also observed improvement in the availability of person-to-person payment tools, which are now offered by 80% of prepaid cards. P2P functionality allows users to transfer funds to another person without converting those funds into cash, which makes their payments quicker and safer. All of the cards that offer P2P tools allow users to transfer funds to another customer of that prepaid program, usually with no fee for the transaction. About half of these programs also offer paper checks or access to PayPal or some other method for transferring funds to someone who is not a cardholder. One especially innovative program in this area is the Boost Mobile prepaid card from Urban FT. Through a partnership with RIA Financial Services, cardholders can transfer money to any individual, either domestically or internationally, right from their Boost Mobile Wallet app. Another improvement in the loading process has been a move towards one-step cash reloading. Today, almost every card can be loaded by bringing the card and your cash to the register at a participating retailer. The cashier can instantly load the funds into your account just by swiping the card. The move towards simple one-step reloads avoids the additional steps of online redemption codes and provides quicker access to cash deposits. Now, the Visa ReadyLink network remains a popular system for providers, but the improvement that we've seen over the past 2 years has really been driven by the launch of Green Dot's Reload at the Register program, which has been adopted by a number of other providers. Cardholders can load cash at several major grocery and pharmacy chains nationwide using the process that I just mentioned. The second trend we've observed is that fees are becoming more transparent and supportive. Program managers are communicating fees in clearer and more understandable ways, and those fees are increasingly designed to be easy to remember, understand, and compare. Well-designed fees can promote positive usage and help cardholders build and sustain financial health. Now, we observed a strong increase in the adoption of clear fee schedules since 2014, with a majority of prepaid cards now using fee schedules that use clear groupings and jargon-free descriptions. And this is important because it allows for informed choices about how the user should best use the card. Now, while some aspects of fee disclosure are governed by regulation, providers can certainly go above and beyond the requirements. A few providers, for instance, provide explicit tips right in their fee schedule on how to avoid certain fees, such as suggesting that members stick to in-network ATMs so they can avoid surcharge fees. or other providers make their fees especially easy for the users to remember so they don't always have to check the fee schedule. And one card that does this really well is the Mango card from Mango Financial. The only fees they charge are $1 for ATM balance requests, $2 for ATM withdrawals, and the $3 monthly fee. So for cardholders there, it's easy as 1, 2, 3. Another area where providers have improved is making it easy to compare multiple plans. Of the 9 cards we looked at that offer more than one fee plan, 100% of them provide clear side-by-side comparisons. Making it easy to compare plans is important to ensuring that customers understand the difference between fee plans and choose the right plan for their needs. CFSI's proposed model fee box, which is linked in the report, is one approach to standardizing fee disclosures across different platforms. However, we should note that this area could see considerable change when the CFPB announces its prepaid regulations, and we will be discussing those upcoming regulations later in the webinar. The Upside card from Banking Up does this especially well. In addition to offering a uniform fee chart for all their prepaid plans, Upside lists the typical usage pattern for each fee. So they'll say, our ATM withdrawal fee is $1.95, and a typical user incurs this fee twice a month. This helps prospective customers understand each plan's typical overall cost. Lastly, we have seen more cards structuring their fees to promote positive usage. 2/3 of the market now structures their fee plans in ways that align profitability for the provider with success for the consumer. And one common method to do this is to waive the monthly fee if the user receives direct deposits onto their prepaid account. This allows the consumer to avoid check cashing fees, but it also benefits the provider. Since the cardholder relies on the card for more of their purchases, they will tend to have higher card usage and longer account lifetimes. The Access 360 card from Fifth Third achieves a similar result by waiving the monthly fee for cardholders who link their prepaid account to a Fifth Third checking account. Doing this reduces the cost to the cardholder while encouraging them to channel more of their transactions through products at Fifth Third. Now, the third trend has been increased personalization of card features. Many providers allow cardholders to customize their user experience to fit their needs and preferences. Providers are offering more options for alerts, budgeting notifications, and are expanding the variety of plan options that cardholders can select. Now, plan variety has expanded noticeably since 2014. All the programs we surveyed offer a standard monthly fee subscription plan. However, 2/3 of programs also offer either pay-as-you-go plans, premium plans with some added functionality, or both. This variety of options means that consumers can choose a plan that best fits the way they intend to use the card. And the Serve card from American Express is a great example of how this can work. They offer 3 versions of the Serve card. The standard version carries a $1 monthly fee. Another version has a monthly fee of $4.95, but charges no fee for cash reloads, which could make it a better choice for users who primarily load with cash. A third version has a $5.95 monthly fee, but offers 1% cash back on purchases, which could make it attractive to heavy users. Customizable alerts is another area that has improved considerably, with market adoption doubling since 2014. The option to customize alerts allows cardholders to track their card usage in whatever way is most helpful to them. Generally, users can select either email or text alerts and get alerts when their balance falls below a threshold of their choosing. Alerts for other transactions are less common, though. Now, the Chase Liquid card has a great alert system. In addition to letting users set a low balance threshold for alerts, they also allow user-defined thresholds for notifications for deposits, for ATM withdrawals, or for all transactions on the card. Notifications that are linked to a card's budgeting tool are seeing wider adoption as well. And today, budget-related notifications are available on over half of the cards which offer budgeting tools, and that number itself has risen, as we'll discuss in a minute. Budget-specific notifications are an essential part of making sure that a user's budget has a positive impact on their habits. The alerts mean that budget targets don't stay in a part of the app that they don't often visit. It allows for real-time updates on whether the person is on pace to meet their spending goals. And NetSpend has one of the leading budgeting tools, including its alerts program. Users can set recurring text or email alerts for each of their budget categories, as in, for their clothing budget, entertainment budget, or for their overall budget. And they'll be notified when they are approaching or have exceeded the limits they've set for themselves. Now, the last trend we'll discuss is enhanced functionality, and a variety of additional features are transforming prepaid cards into sophisticated financial tools that can help people spend wisely, plan, and save for the future. The number of programs that offer companion cards has increased significantly, with about twice as many consumers now able to add multiple users to one account. So this means that people can share funds without having to withdraw and carry and exchange cash. And this is ideal often for families, but it can also be very useful for groups of friends or just in any situation where you'd like to share funds. And Regions Bank is a great program for companion cards. It allows its now cardholders to add multiple users to each account, and each user has their own card, but also their own online login and access to all the online tools offered by Regions Bank, meaning everyone can share one pool of funds very seamlessly. Now, budgeting tools can help consumers better plan and manage their spending, with a little less than twice as many cards offering budgeting tools as did 2 years ago. Now, these tools are an essential part of helping consumers track and understand their spending habits. These tools will often automatically assess the cardholder's spending and group expenditures into categories, so they can quickly open up the tool and see what their spending has been on clothing or on entertainment or on dining, to give them an idea not just of overall how they're doing on their budget, but also in a number of subcategories where their money is going. Now, one card that has made budgeting a central part of the experience is Movin'. Their app displays the user's spending against their monthly average, so they can track their progress towards their budget goals throughout the month. And this is, when you open up the app, it is something that pops up right in front of you, and it's very clear and completely integrated with the experience of using the card. Now, finally, the availability of savings features has also expanded since 2014, and now 2/3 of cards offer some kind of savings feature. Savings features obviously allow their users to set aside money for the future, and this is really important for helping cardholders to be more resilient in the face of unexpected events, and also to allow them to take advantage of opportunities when they arise. Now, H&R Block has been conducting a pilot program for its Emerald cardholders. H&R Block has been looking into the effects of incentives and gamification on the savings behavior of their cardholders to see how different incentives affect the amount that people save each month. They're also sharing their data with the CFPB to provide insights on how to encourage savings. Now, finally, it is important to mention areas where there is further opportunity for innovation. While we think the industry has made great progress overall over the past 2 years, there's a number of areas in which we feel more could be done to provide value to the consumers. In terms of loading funds, certainly the increase in remote deposit capture has been wonderful. However, one area where we have seen progress lag behind is in allowing cash deposits at ATMs. It's a very small percentage of cards that allow their users to load with cash at ATMs. In terms of fee disclosure, some fees are still commonly left off of fee disclosure documents. Inactivity fees, account closing, and check issue fees, those less common fees, that consumers may run into at some point are often much more difficult to get a handle around. So again, this is an area where CFPB action, which may be forthcoming, will certainly have an effect. In terms of promoting positive consumer use, we think it's important for providers to remind users to monitor their fees regularly, and certainly, to the extent possible, provide tips on how to avoid particular fees. And to the extent that providers can be proactive in informing consumers about the manner in which they use the plan, and potentially if other plan options might better suit their usage habits, that can be beneficial, certainly for the consumer, but also for the provider in retaining that customer. In terms of enhanced functionality, as I mentioned, budgeting and savings features especially have both improved in the past 2 years. However, we've heard from providers that consumer adoption of these features remains relatively low. And we would like to see more research and more discussion with consumers to try to understand how they're using these tools, what the value that they get out of these tools is, and perhaps to work on tweaking some of these tools so that they do see greater adoption. In terms of other areas, account access is one area that remains somewhat tricky. First of all, the proportion of providers that allow their prospective customers to sign up for a card, especially using foreign identification or using an ITIN if they do not have a social security number, those both remain relatively low, and certainly the regulations allow for a combination of ITINs or foreign IDs to be used in the sign-up process. Also, one area which has been relatively hard to find innovative solutions for has been allowing some sort of follow-up mechanism or additional procedures to do consumer ID in the event that their initial application raises a red flag for some reason. In terms of other financial services, certainly, as I mentioned, this is an area that has improved since 2014. However, we certainly think there's an enormous opportunity for prepaid card providers to use their consumers' card usage and history as a basis to offer them other services. Checking accounts or secured credit cards, or even some more innovative programs have looked at some basic forms of insurance that they can potentially offer their cardholders based purely on that person's usage of the prepaid card program. And finally, credit access. Progress on this front has moved slowly ahead of the CFPB announcement, but we do know there is a lot of interest in the industry, and we are certainly hopeful going forward that once the rules become more clear, providers will look into opportunities to provide credit access and greater opportunities for their cardholders based on the prepaid program. And with that, we'll send it back over to Thea, and we can begin the discussion with our guest speakers. So, Thea?
Perfect. James, thank you so much. Now I would like to turn to our panelists. Before I do that, though, I'd like to remind our listeners to submit any questions that you had about James's presentation as well as our speakers' presentations in the panel on the bottom right hand of your screens. And I do want to remind our listeners that we will be making a recording of this webinar available. We'll send it out to all registered participants after the presentation. So I'm so pleased that we've been joined by our esteemed group of speakers this afternoon. We have Crystal Anderson, Director of Product Strategy and Development at H&R Block. We also have Allison Holt, Senior Vice President of Now Banking at Regions Bank. And we have Paul Landry, Senior Vice President of Portfolio Management at the Bancorp Bank. And so I'd like to begin by asking our panelists to each provide a brief overview of their prepaid programs and their company's role in the prepaid industry. And Crystal, if you're ready, why don't we start with you?
I'm ready. Thank you, Thea. Well, as Thea mentioned, I'm the Director of Product Strategy and Development at H&R Block, and H&R Block is the Program Manager for the Emerald Prepaid MasterCard. We file 1 in every 7 U.S. tax returns, and 86% of our clients receive a tax refund. So of those 86% clients who receive a tax refund, many of them are also or underbanked. And until we launched the Emerald Card in 2007, their only option for receipt of the refund was a paper check. So when we launched the Emerald Card, it was really to solve a specific client need, to replace the time-consuming and often expensive act of cashing a paper check. What we ended up launching, though, was a general-purpose reloadable card, and what we found was that our clients' needs extended beyond the receipt and the spend of their tax refund. So since 2007, when it launched, we've not only migrated that card from a tax refund card in both feature and functionality, but we've also seen a migration in cardholder usage beyond just the spend of that tax refund.
Fantastic. Thanks, Crystal. Allison, how about you?
Sure. So the Regions prepaid card is called the Now Card, and it's one of the core products that's offered as part of our bundle of services directed at customers that manage their finances on a cash basis. And Regions was one of the first financial institutions to begin offering a bundle of services directed at these consumers where they could access it all under one roof. The Now Card has been in play since middle of 2011. And it has had many features added onto it since its rollout. There is a savings product that is directly connected to the Now Card, as well as we provide loading services through our ATM, all of our branches, mobile RDC, and we also utilize the Visa ReadyLink avenue. We've seen the prepaid card grow from just those customers that we started targeting as managing their finances on a cash basis to also being utilized as companion cards to our checking accounts for special use cases such as travel or for nannies or different things such as that.
Fantastic. Thanks, Allison. And Paul?
Thanks, Thea. So the Bancorp Bank is one of the largest issuers of prepaid products in the country. We work with a variety of program managing partners, many of whom have already been talked about in many positive ways, to issue a variety of prepaid products, including general purpose reloadable, gift, pre-tax benefit, incentive, among others. Excuse me. We've been in the prepaid space since 2002. Shortly after that, I joined the team. Again, we're not necessarily just one product, but we do a variety of products across the spectrum.
Fantastic. Thank you guys for that helpful overview. So in our presentation, myself and James, we just highlighted 4 trends that have contributed to improvements and changes in the prepaid card industry in recent years. And I'm curious to hear from our panelists, what did you guys think of the trends that we highlighted, and what other major trends have you guys observed that might be shaping the quality of the industry? So why don't we mix it up? And Paul, I'd be curious to hear from you on this question.
Sure. So for us, I mean, really the conversation could begin and end with us as it pertains to mobile. We've had a lot of demand and from our business partners as well as the consumers that are using our products for a more versatile, more robust mobile applications. What we've seen is the trend where more and more folks that are using these products are doing their banking through their phone, just like the traditional bank customers are doing as well. And I think just more and more the services that have been requested to push, and we've seen obviously with the increase of the RDC all through that mobile app, people are looking for services rivaling the traditional banks.
Yeah, and I mean, that's a great trend to highlight, one that I think many of us in the industry have observed. I'll point out that hearing that the users of your prepaid cards are using mobile is not a surprise to me or likely to anybody listening, because we do know that underserved, underbanked consumers use mobile services at a rate that's actually higher than that of those consumers who are considered fully banked. So great trend, and great to hear that it's kind of, you guys are seeing it play out in your industry. Allison, how about you?
I would have to agree with Paul with regard to the mobile. I think also what we're seeing is kind of falls under that enhanced functionality. Kind of as I mentioned earlier, we're seeing different uses for the card, special use cases, other than a replacement for a checking account. So I think sort of that trend to utilize the cards for things other than everyday spend, like the travel, or to use to set funds aside for, say, online purchases or special purchases, things like that, so making it easier for customers to be able to bucket their spending and see where that's going.
Fantastic. Crystal, how about you?
Agreed. I think we're definitely seeing trends in mobile, and then just usage and how people are using their cards differently. I'd say what I'm most proud of, though, is as an industry, it's very clear that we're asking ourselves, what are the problems that consumers are facing? And not only that, but what are they willing to solve with a prepaid card? And I think the answer to that question has really changed over time. As Allison mentioned, prepaid cards really started as a replacement for checks or cash, or to allow consumers to spend in spaces where checks and cash were not enabled. But now I think we've earned the permission with consumers to solve for a more comprehensive problem, and CFSI talks about this a lot, which is financial health. For example, you mentioned, or James mentioned, that H&R Block is leveraging our prepaid platform to allow consumers to set money aside to be used when they see fluctuations in income. So it's not necessarily a traditional savings account that is earning interest, but it's enabling them to set that money aside for those emergencies, or the few times a year, maybe several times a year, where the consumers are seeing that fluctuation. And I think it's through the permission that we've gained that we're really going to change the industry, but also the way consumers think about our industry.
Yeah, that's fantastic. And I'd actually like to pick up on the theme that Crystal just mentioned of adding, enhanced functionality features. Maybe it's the mobile, maybe it's the savings or budgeting features that will help consumers improve their financial health. And so I'd like to put this question to the speakers, and I'm happy to take answers in any order. What has your program done in the last few months or few years to really give consumers that more full-featured experience, to offer those features and functionality that will help consumers build financial health? And I think I am. Please, Paul, go on. Go for it.
No, I was just going to say, I'll go ahead and jump in. So, for us, it's a little bit different. Bancorp does not, in and of itself, issue its own particular product. Instead, we kind of provide the engine for our business partners business partners like NetSpend, like AccountNow, some of the others that we've discussed today. And I mean, essentially, it is a never-ending, evolving that takes place out there. We conduct, through our business partners, they conduct a number of focus groups with their customers. They use their products, they go out, and essentially what they're always looking to do is to continue to improve so that those folks, the consumers, can get the best banking relationship product that they can get, not even just from the standpoint of the card itself, but that banking relationship that they want.
Fantastic. Allison, how about you?
I would say for us, it's been iterations of first rolling it out and then seeing how it was being used and what can we do more, what are the problems that we can solve for. So by adding the savings product where they can save for the next few weeks or they can save for the next few years and really utilize it in a way that fits their needs. I think also having access to various various channels. So being able to load their card through multiple channels, access to the branch network as well as the ATMs, and also access to all of the same online tools that our checking account customers have. So it really kind of starts to blur the lines between our prepaid and the checking account products. And I think as we move forward, it'll be more of that sort of customization around alerts and access to those budgeting tools.
Yeah, great. And Crystal, you started to speak to this in your previous answer, but happy to have you expand on it and add a bit more.
Yeah, I would say much of the same. It's one of the things that we're most proud of late is our ePocket, which is our set-aside account. And and our partnership with the CFPB, the pilot that we're doing to really use the tax time opportunity as an opportunity for our clients to save. I had mentioned that 86% of our tax clients receive a refund, and the average tax refund represents about 15% of our clients' average annual income, and that's just such a significant spike in income or savings opportunity. And so not only do we have the ePocket that allows them to put aside money for those spikes in income and emergencies that may pop up every couple of weeks and not necessarily every couple of years, that allows them to put that money aside when their goal really isn't to accumulate wealth, it's to be able to get through those hard times. We think that there's still the significant opportunity with the refund event as well, and for clients to use the Emerald card as a way to have that money there for emergencies.
So each of you have spoken about a lot of recent changes that you've made, introducing new features and functionality, and it's obviously something that we at CFSI support. There are the features and functionality that we listed earlier in the presentation that many of you guys have just mentioned that can make prepaid cards into tools that can help consumers build financial health. However, there are obviously also challenges to innovating in this industry, as there are in any industry. And I'd love to spend a little bit of time talking about what you guys on the phone, you guys as speakers, see as some of the greatest challenges to innovating in the prepaid card industry, and how you might be able to surmount some of these challenges. So Paul, why don't we go back to you with this question?
Sure. So I would tell you that probably, as crazy as it may sound, we still run into areas where we are either not educating enough, or we're not educating in the right way for there to be enough understanding. And ironically, I don't know necessarily that this falls down to the actual consumer. I know that I myself have gone out to some of our reselling locations. I've talked to our actual consumers, and I can tell you that most of them can tell you the difference between the card that they're using and why they chose that over an alternative card. In some cases, another product that may for issues. But where I continue to see some of the disconnect is continuing and working with some of our the regulatory bodies, with some of the other advocacy groups that are out there. And you know, certainly I think the understanding that prepaid as a whole is not just one product, it is a group of products that serve very different needs and work in very different ways, like difference between general purpose reloadable or an incentive or an FSA card, and then making sure that they understand some of the things that we're trying to do, not only to make them safer, but also expand the capabilities for the consumer to give them the features that they want.
Crystal, how about you?
Yeah, so again, as CFSI has addressed in the prepaid scorecard, prepaid cards vary. And said differently, not all cards are created equal. And we should expect to see, we have a reasonable expectation that there will be disparity in fees and functionality because no card will be all things to all people. The thing that concerns me, though, is that there's disparity in fraud prevention. And it's one of the areas that not only limits innovation, but puts our industry at risk. There are a wide range of features that help manage fraud once it occurs, so after the fact, and that's absolutely a value add for consumers, but I think there's still opportunity in proactive measures for H&R Block and for any other prepaid card that is eligible to receive tax refund. tax refunds, the cardholder must register the card and verify their identity prior to the receipt of those funds. And in fact, we validate cardholder identity at the time that the card is issued. And the more that we can do as an industry on the front end to validate the person who's using the card and validating that the person who's using it is who they say they are, the better experience they can have on the back end. And I believe that we need to create industry-wide safeguards that protect prepaid as an industry. And without protecting the industry from fraud, innovation can't happen effectively. And so we are a big proponent of having those industry-wide safeguards, and I think that it's something that we have to continue to fight for so that we can continue to innovate in this space.
Absolutely. I think that was very well said. And Allison?
I think for us, being an interchange-regulated bank, that's one of the biggest challenges for us is being able to innovate and innovate profitably. So it's a constant balance of what can we build and bring value to both parties, have that value exchange, and at the same time maintain our interchange exclusion from that regulation. And I think too, and I know we'll probably talk about this a little later, but the proposed rules for prepaid, I think again as an industry that has an impact on what directions that you might go and where there's limitations on some of the innovation that you might want to put forward, and then it also impacts the customer as well.
Yeah, so that was a great segue into my next question, Allison, which I'm actually going to toss back to you. I do want to say that in just a moment I am going to turn to some of our audience questions. Before I do that, though, I'd love to know how our speakers think that the CFPB's upcoming prepaid regulations will affect the prepaid industry. And I know that's a big question, and it's an intentionally vague and open-ended question. But we spent a lot of time in our latest research really, again, looking backward. How has the industry changed? How has it improved? How has the quality been affected? I'm curious to ask you guys to look forward a little bit and to talk about the impact, again, of the CFPB's regulations on the prepaid card industry looking ahead. So, Allison, I'm going to toss that back to you.
Yeah, so I think immediately for several of the providers there won't be a huge impact, but as you said, looking to the future, it does change the way we look at how we might want to change our products and what other features and functionality we might want to offer. I think aside from a bank provider, but cards that are what I would call the JPEG cards, the type of information that they might have to disclose, it starts to become very cumbersome and difficult for them because they don't have the same sort of platform. And so what does it do with consumer choice and availability of products and the access for those? So I think that's where some of the regulation is going to come into play in shaping what things might look like in the future.
Absolutely. Paul?
So I think, first of all, I mean, Allison put it very, very well. There's places down the chain that we're going to take a look at that simply may or may not work the same way anymore as what we're accustomed to as far as being able to deliver some of these products. I mean, ultimately, we don't know exactly where it's going to finally land. I mean, we've just like myself and many others, I'm sure, that are involved in this call, we've spoken directly to the CFPB. We answered the comment period. We provided endless amounts of data to them so that they can understand what's going to happen and how the products work and what might ultimately change. And so for that place, we're on a little bit of uneven ground, so to speak. I will say that some of the things that we know are going to be, the foregone conclusions, the industry has already adjusted to. So, things like the fee disclosure we talked about earlier, adoption of Reg E, applying across the board to general purpose reloadable in addition to payroll. All of these things the industry has already adjusted to. And so from that standpoint, I think we're sitting pretty good. But ultimately, we don't know exactly where it's going to fall. But as Allison mentioned, it is the endpoint items of delivery which I think are going to be affected the most.
Great. And Crystal?
Yeah, I'd say more of the same, and we've all been speculating and are anxiously awaiting the final rules, so we'll know what the real impact will be. But in addition to what Paul and Allison have said, I would say in looking forward, but also impact to some existing programs, I expect the greatest impact to be around credit access on prepaid. I think that's the one that will have the biggest impact on existing programs. And then as we look at these stretch features and functionality and credit access being a huge opportunity, I think that's the one where we're going to see a lot of impact.
Yeah, and as James alluded to in his comments about the availability of credit, it sounds plausible that overdraft on prepaid as we know it might disappear. But at CFSI, we think a lot about how availability of high quality credit can still be offered, be made available to some of the customers that you work with, those that are struggling with their financial health, to help them weather an emergency, manage a financial shock, things of that nature, maybe not directly on the card, but through innovative models that might, again, make this access available, but would still conform to the CFPB's guidelines. So it's something that we at CFSI have been thinking a lot about. So thank you guys so much for answering my questions. Now I do want to turn to some of our audience questions. And we have a question from one listener about the value that rewards programs offer from a consumer perspective. And Paul, I'm curious if you want to take that question. Again, the question is about the value that rewards programs offer to consumers.
No, it's a great question. In fact, it was kind of one of my backup go-to answers on when we were talking about, innovation trends that we were seeing. We have actually seen an uptick in many of our business partners wanting to utilize rewards programs or promotions, to stimulate usage of the card and to adopt, more stickiness with the product. Sadly, I would have to tell you that it's up and down. I mean, some of the reward programs I think people are very fond of, but even within a program using the same rewards program, adoption has been 50-50 at best. We have not seen any overwhelming program that's kind of captured the hearts of the consumers to go in and use. I think by and large, the ones that seem to be most successful are the ones where the consumer is awarded for continuing to, for example, direct deposit onto their card and have, monthly fees wiped out. But other than that, we have not seen a specific trend or feature that's really taken off.
Great. And Allison, I'm going to direct this next question at you from one of our listeners. And the question is whether you think that using a prepaid card is taking consumers from traditional banks. The second part of that question is what happens if a consumer does not have a traditional account but wants to go into home ownership? And Allison, I'm giving you this question because Regions is obviously a bank and you offer a prepaid card. So I'm hoping that you can answer that question and then maybe speak a little bit about the value proposition that your bank has seen in offering prepaid cards to these consumers.
Yeah, so I think maybe the first part of that question was, what do we see or do we feel like that prepaid cards are taking business away from banks? And I think anytime that there is somebody else that enters into the industry, that there is some of that stealing of customers and whatnot. But I think that for financial institutions such as Regions that are able to offer a product like we have in the Now Card, that we are going to lose fewer of those because we have a lot more that we can offer as a financial institution. So if and when they're ready to get a mortgage or to have a personal loan, that sort of thing, they've already had a relationship established through having our prepaid card. So, and that may go into answering both of the questions. So, of course, there's going to be a little bit of losing some customers to other prepaid providers that may be out of convenience where they can just walk in and get the prepaid, or they don't have to go through all the same enrollment process that we go through within a financial institution. I think that in the long run, for the customer being able to have a wide breadth of services to offer them if and when they're ready, then for those we really end up getting the more quality customer.
Great, thank you for that. And Crystal, I'm going to direct the final audience question at you. And one of our listeners would like you to expand upon your comments about validating identity for fraud prevention. If you could expand a little bit on how H&R Block goes about doing that, I think that would be helpful.
Absolutely. So the way our cards are issued, the majority of our cards are issued is in the tax office at the tax desk with our tax professionals who are also agents of our issuing bank, B of I. And so they do full KYC, CIP, they gather the consumer's name, address, social security number, date of birth, and validate that against photo IDs that are required by USA Patriots Act. And so when that card leaves our tax office and is ready for a tax refund to be loaded to it, we know that the person who has that card in their possession has been validated. And so therefore, when all of the name matching happens by the IRS, then we don't have clients who are stuck in this limbo of not having access to their tax refund. And when the card is not issued in a documentary process or a face-to-face process, we have a partnership with Ideology where we do IDA and IDV, and we are checking the information that they've provided against public records and asking out-of-wallet questions and doing as much as we can upfront and proactively to ensure that the person who is getting that piece of plastic is actually the person whose name is on the card. And we feel really strongly about it, and it's something that we take very seriously. And I know that everyone does, but I still believe that it's those proactive measures and that can help us as an industry. And I certainly do not want to call out other programs for lacking in that, but there are certainly those of us who don't do it to that extent, if you will. That's what I meant by that.
Got it, thank you, that was helpful. So Crystal, Allison, Paul, I'd love to just give you guys a huge thank you for joining us on the webinar today. I think that these discussions are always incredibly helpful to our listeners, and as evidenced by the number of questions that we got from our listeners, I think it was a highly engaging discussion. So thank you again. I would like to leave you with just a few final thoughts, and that's to encourage everybody on this call to download a copy of the prepaid scorecard. It goes into much greater detail about a number of the topics that we highlighted in the past hour, and a copy of the scorecard is available at the bit.ly link on the screen. We'll also, I believe, be sending you a copy of the scorecard in a follow-up email along with the slides and the recording of the webinar. Finally, I would like to put in just a quick plug for some of CFSI's consulting services. So we mentioned at the beginning of this webinar that we do indeed provide customized advice to all sorts of financial institutions and other companies looking to deliver high quality products and practices. If any of you who listen to this webinar are interested in following up with us to receive some proprietary advice based on your program, please reach out to us by following the bit.ly link on the screen in front of you. We'll also be providing that link and the form that goes along with it in our follow-up email. And then lastly, I'd like to make you aware of just one more upcoming webinar that CFSI is hosting in the next few weeks as a part of our free webinar series, and that's around measuring financial health. So on this webinar on Thursday, April 14th, in a month or so, we'll be highlighting 8 key metrics that financial institutions can use to measure the financial health of your customers. So with that, I would like to, again, thank our guest speakers and thank all of you for joining us today. We really appreciate the time that you've spent with us, and we hope to see you next time. So thank you so much.